A warning for the world economy. The worst is yet to come. The International Monetary Fund lowered its growth outlook for 2023 and suggested that interest rate increases could spur a harsh global recession. The coming year will be even rougher than this one. Here's what you should expect and what you can do to prepare and protect yourself. We won't give too much context, but say how we see things developing in different areas that will majorly impact your life over the next couple of months. Many imbalances have developed over the past few decades due to misguided monetary policies. The result is the everything bubble, the financially incorrect valuation of assets not based on real economic fundamentals. This chart is just one of many indicators that things are changing fundamentally in the background. This bubble burst in 2022 and in 2023, there must be an alignment between the financial and real economies. In other words, many assets will potentially lose value massively in the medium to long term. Let's start with the energy crisis. Oil is the master resource that runs everything. Prices went down after the U.S. tapped into its strategic petroleum reserve. In September, OPEC said enough is enough and introduced production cuts. At the same time, U.S. SPR is running low and now stands at a 40-year low. In the following months and into 2023, we can expect oil prices to increase further and thus push inflation higher. Europe is already suffering a lot from high energy prices. But even when there is demand destruction at a large scale due to the ongoing recession, we don't see energy prices going much lower. There isn't enough high-density energy available. Electricity and gas prices are increasing across Europe, with bills close to double from last year in most European capitals, according to the new data from the Household Energy Price Index. Meanwhile, due to the high living costs, strikes are happening in many countries. We'll likely see more of that as more and more Europeans can't make ends meet on their salaries. The high energy price hurts not only regular households, but also many businesses. Germany, the biggest economy in Europe, is facing deindustrialization. This will have a long-lasting and significant impact. And more job cuts and bankruptcies are on the way. All the problems mentioned in this video, added together, will likely deepen the recession. Companies both in the US and the EU are planning job cuts. Many businesses running on cheap, borrowed money will be unable to pay back their debt due to increasing interest rates, thus ending up bankrupt. The Bank of England warned that the UK could face its most prolonged recession since the 1940s. The EU faces pretty much the same situation. Now, let's take a look at the inflation and interest rates. Central banks around the globe try to combat inflation by increasing interest rates. Recently, official CPI numbers in the US have shown a slight decrease, which seems good news. As a result, the US Fed will likely slow down the rate hikes. Short term, this could be great for the stock and crypto markets. Let's look at this chart that shows historical inflation and CPI data. We can see that historically, there were only two time periods when inflation, the orange line, was this high: the mid-1970s and the end of the 1970s to the beginning of the 1980s. The Fed had to raise the interest rate, the blue line, above the inflation rate to get the inflation down. And this time is no different. In the November FOMC meeting, Powell said there would be no decrease in the interest rate before multiple months of decline in inflation. The Fed also wants the real interest rate to be positive, which means the interest rate needs to be higher than inflation. However, will inflation be contained in 2023? Probably not. This inflation is characterized by the growing money supply in recent years and the persisting lack of energy. While the Fed can impact the monetary aspect, it can't solve energy scarcity. The Fed and other central banks could eventually accept baseline inflation a few percentage points higher. All of the factors we mentioned will further exacerbate the already tense situation. This will inevitably affect politics, which will feel compelled to calm the situation. The time for meaningful intervention comes years too late. In addition, politicians may not be able or unwilling to find sustainable solutions if the interests of global elites are opposed to them. Here's how to prepare for the worst. In conclusion, 2023 might even be worse than 2022. The real downturn has just started. Here's what you can do about it. Now is not the time to take significant risks and save money. Do not spend on unnecessary things. And do not take on debt. As we described in this video, we could see prices of many assets continue to fall. Therefore, if you want to invest, wait and see how the situation develops. But as Warren Buffett said, be fearful when others are greedy and greedy when others are fearful. And many investors see Bitcoin as an excellent long-term investment. Try to make yourself less dependent on the system. For example, find a crisis-proof job. Look for ways to become more efficient and self-sufficient in housing, energy, food, and transportation. Costs in these areas are likely to rise. So, there you have it, guys. If you enjoyed watching this video, don't forget to smash the like button and subscribe to be the first to watch the following videos and for more finance news, guides, and updates. Thanks for watching.